Hi there, it's Walter here from fxjake.com, and you're here at the Daily Trader. I want to talk about 5 ways that you can get better at your trading. 5 ways for you to improve your trading. The first is to essentially limit yourself to a certain number of trades. This may be a certain number of trades per day. It could be a certain number of trades per week. It could even be a certain number of trades per month. Depends on your trading frequency. So if you're trading very often, then you might say, look, I'm only going to be able to take 3 trades today, and so I better make them good. And you wait for those really nice trade setups. Doesn't mean you have to take all 3. It just means that at the end of the 3rd trade, you know that you're done for the day. Same thing for the week. You might say, I can take 7 trades this week, so I better make them good. And once you've had your 7th trade, win or lose, you know you're done for the week. This is really good because it allows you to avoid revenge trading. It allows you to avoid over trading. Both of those pitfalls are very common amongst traders. The next thing you can do to get better at your trading is to simply trade small. What do I mean by trade small? What I mean by that is I mean to trade small amounts of money. This will allow you to concentrate on the trade. You want to manage that trade well and basically milk everything you can out of that trade. And if you're looking at the dollar amount, if you're trading too much, you'll concentrate on the dollar amount and the money that you've made or lost on the trade. And instead, you should simply be concentrating on the trade itself, following your system as best you can. And if you trade with smaller amounts of money, you can easily do that. The money won't distract you. Small, of course, is relative, and different people have different definitions of what a small trade is and a small amount of money is. But for you, it's important that you start out trading small. The next thing you can do is take a break. And there are basically 2 times to take a break. One is when the markets are closed. If the markets are closed, it's time to get away from the computer. And 2, it's when you have a losing streak. After you have several losing trades, it's time to get away, refresh, recharge the battery so that when you come back to the charts and look at them, you're able to put aside all of the negative experiences you've had before from your losing trades. This is really important. A lot of people don't do this. They want to immediately jump back into it. Again, it leads to revenge trading. It leads to, breaking your system rules, maybe even risking too much. So really the way to do this, the way to approach a losing streak is simply get away. Likewise, even if you had a great week of trading or a great month of trading, it often makes sense to get away as well and just recharge the batteries so that when you come back, you're fresh. The other thing that you should be able to really use is this formula. Concentrate on this formula. This is the expectancy formula. The expectancy of your trading system is equal to the probability of a win times the average win, and then you get that number and you subtract the probability of a loss multiplied by the average loss. And that is going to give you your expectancy. Let me show you an example of how that works. Let's say you have a trading system and it has a 60% win rate. So that means 40% of the trades are losers. So that's 0.6 right here. That's 60%. I have an average win of $100. So that means I'm going to multiply 0.6 times 100, and I'm going to subtract 0.4 times 100, because 40% of my trades are losers, and those also have an average loss size of $100. So what do I come up with? Well, that means I'm going to come up with 60 minus 40, and my expectancy, therefore, is $20. Well, what does that mean? The way to look at this is to basically take your average loss, right here, $100, and you take your expectancy. So I take my expectancy, $20, and I divide it by my average loss, which is $100, which means I'm going to make a 20% return. It means that I expect a 20% return over the long run with this trading system, right? That's what it means. So if I'm going to risk $100,000 in trades over time, $100,000, that means I expect to make 20%, or $20,000. If I risk $1 million over time in the number of trades, it may take several decades for me to run $1 million worth of trades through my trading system. But if I do that, I would expect to make $200,000 based on these numbers. You need to know what your numbers are, and the best way that you can get these numbers is to backtest. I think the best way to backtest is to use a software program like Forex Tester, but it's up to you to decide how you're going to backtest. The important thing for you to know is this expectancy formula. Run this through your brain every time you get a trading system. Calculate it out after you have a losing streak and you go back and you do some more testing to make sure that you're happy with your trading system. Recalculate your expectancy. Make sure that it's positive. If you're jumping around with winners and losers and your account balance never seems to go up, or it goes up and then it goes down, goes up and then it goes down, maybe your expectancy isn't much. Maybe it's like $1. Maybe you have a negative expectancy. So it's time to calculate that out using your live account statements, using your back-tested statements from Forex Tester. Whatever you have, you need to figure out what your expectancy is. You should be very intimately aware of this expectancy formula. And the last and fifth thing you can do to get better at your trading is to know what to focus on. Know what to look at. Know what you can do to get better. A lot of traders make this mistake. They will focus on the last trade. So if on my last trade, I didn't hold on to the trade long enough, in other words, I got out too early. So instead of making, let's say, 350 pips, I got out early and only made 100 pips. So I thought, oh man, that's such a bummer. I missed 250 pips. So then on my next trade, I wait too long and then the market comes back and stops me out for a loss. That is an example of focusing on the wrong thing. What I need to focus on in my trading is the trade at hand, and I need to focus on using my system rules for this trade and this trade only. You don't want to think about the last trade or the trade before that or the trade last week or the trade last month or the last time I traded this currency pair or whatever. What I really need to think about is what my system rules are and what I can do to follow those rules. That's what I should be focusing on. I hope that you've enjoyed the video, and until the next video, I wish you very happy trading.